Well, good afternoon, everyone. Welcome to today's market snapshot. Now, as we look across to the calendar, the main focus of not just today but this week is the Federal Reserve, the Fed's monetary policy statement today, 7 o'clock, interest rate decision, and the once every 3 months economic projections. Now, that's the main focus of this week. Markets have been slightly choppy, slightly range bound today in anticipation for what is going to happen later on. Now, as we look forward to the Fed this evening, the focus today will be on a couple of things. The first is markets expect an announcement on the timing of the reducing of their bond buying program, tapering of their asset purchase, to give us a specific date into the future where they may look to do this. The second of three things, in my opinion, things that they're going to look at is the dot plot. Now, as we get the dot plot up here from their June policy meeting, we see a number of members longer term post 2023, so 2024, with a number of members in 2023, a number of members in 2022 predicting some rate hikes. You can see these across here, a couple of here, and it gets more widespread as we go on further out into the future. 2021 is likely to remain the same. I doubt any members will decide to want to raise interest rates at the back end of this year. And the main focus will be on these figures at 2022. Now, the bottom line of dots here is for no rate hike. Then we have a slight rate hike, and then for these figures up here. So the main focus for the June meeting is that we did get a few more members predicting rate hikes in 2022. Now, if we get more people move from 23 to 22, if we get more people move from 2024 to 2023, that would be seen as a hawkish stance from multiple members of the Fed. Remains to be seen whether something like that is brought in. Another factor to take into consideration from the economic projections is this inflation story. Is it transitory? Is it not? Are we having some stagflation? Is inflation slowing down? As we look towards the economic projections, we will have to look out for the inflation projections. Fed Chair Powell has been banging on for a long time about inflation being transitory. We'll see tonight how transitory they think that inflation may be. In terms of where to go with this later on, what to expect, when you think about it, when you think of the Evergrande troubles, the Chinese housing market troubles, the slowdown in growth that's causing in China, the troubles that's causing in the Chinese economy, with China being the second largest economy in the world, with the COVID situation in America, with COVID cases rising, not just COVID cases rising, but COVID deaths rising substantially across America, with the big miss on NFP of over 500,000 at the beginning of this month, plus CPI in America slowing down slightly this month. It does open the possibility for a dovish Fed this evening, for them to say, no, we're not going to taper asset purchases this year, we're going to stick to the script, we're going to keep buying bonds until we see substantial further progress in the economy. And that, if markets are expecting the Fed to give us a date for tapering asset purchases, if they do not give us a date later on this evening, that would be seen as a dovish comment, which would mean dollar sells off, equities higher again. We can keep buying equities into the future, and gold should go higher again. A bit difficult to predict, how we can look to trade it. You can look to gamble if you want, but we're not in the business of gambling. We could look to straddle one of the if euro, dollar, or gold, or any of the indices, any of the dollar markets, so we could get a level above, a level below, set an OCO order, and one cancels the other order, above and below, and look to take advantage of some increased volatility. You can look to make a prediction. If you want to make a prediction, me personally, the way I'd look to trade something like this evening, I think personally we'll get a bigger move out of a dovish Fed than we will with a hawkish Fed. I think potentially there might be a bit of an opportunity for a dovish Fed this evening. As I says, the reasons why I mentioned earlier, with the NFP miss, with inflation miss, to me it doesn't make a great environment to taper asset purchases at the end of this year. But we'll have to see what they think. So for me, I'd probably look to put a sell stop on some dollar positions. If it gets triggered, great. If it doesn't get triggered and we go long and we get a hawkish Fed, then I'm happy to stay out. weak dollars, long equities, long gold will be my preferred choice this evening. If that doesn't play out, and I'm wrong, a lot of investment banks seem to disagree with the statements that I've just made. I'm not cleverer than any of them. I'm not going to look to try and be cleverer than them. I have my opinion. I'm going to try follow my opinion, and if my opinion does not play out, I'll keep my money in my pocket. That's all from us for today. 7 o'clock this evening, Wednesday evening, September the 22nd, the Fed press conference at 7:30. We'll have to look forward, see what plays out. See what plays out this evening, and we will have an update for you tomorrow.